I know you've seen the headlines about silver. It's on fire. But what you're not seeing is the real story, and it's happening 30,000 feet in the air, inside cargo planes flying all over the world. Let's get into it.
Okay, first things first, let's just get the big, flashy number out of the way. We are talking about a plus 130% return in 2025, just year to date. That's the kind of performance that leaves pretty much everything else, stocks, even gold, in the dust.
And yeah, the story everyone's telling is pretty simple, right? For years, the world has wanted more silver than we've been able to mine. So we've been dipping into our savings, drawing down stockpiles. It's a classic squeeze, but that's not the whole story. Not even close.
I mean, think about it. If it's just a simple supply and demand issue, why would anyone be doing this? Why are traders paying an absolute fortune to charter planes just to fly heavy silver bars across the ocean? It sounds crazy until you understand what's really going on.
You see, this weird activity, it's a symptom. It's a sign of a fever in the physical market that you will never ever see on a simple price chart. And honestly, this is exactly the kind of shift we track here on this channel, the stuff that happens before it hits the headlines. To really get what's going on, you have to understand that silver has this total split personality. It's a Jekyll and Hyde situation. On one side, it's a precious metal. People buy it when they're scared or when they're feeling greedy. But on the other side, it's a critical industrial metal. You need it for solar panels, electric vehicles, you name it. It's got one foot in a bank vault and the other on a factory floor. And here's what's so telling. Look at this breakdown. Unlike gold, over half, more than 50% of all silver demand is from industrial use. This creates a massive built-in tug-of-war. Sure, investors might want the price to go to the moon, but the factories that actually consume the metal, well, they're going to start hitting the brakes if it gets too expensive.
Okay, so let's get right into the heart of this mystery, the global silver airlift. This is where the story gets really wild. So here's how it all went down, step by step. First, a simple change in tariffs made traders move a huge amount of silver from London over to the US. This accidentally drained the vaults in London, which is the global hub for silver trading. Suddenly, there's a localized shortage. So what happens? The price in London shoots up more than 3% higher than the global price. And that's it. That's the magic number. That gap is big enough to make it profitable to literally fly the silver right back across the Atlantic. We saw the same kind of arbitrage play out in India too.
And look, understanding these weird market dislocations is fascinating, but it's really just scratching the surface. The more important question is, what does all this chaos tell us about where the market is headed next? To answer that, we've got to look back at history. Because every single time silver has gone on one of these euphoric, spectacular runs, it's been haunted by the ghosts of crashes past.
I mean, just look at this on an inflation-adjusted basis. The 1980 peak, when the Hunt brothers tried to corner the market, that was an absolutely insane $150 an ounce in today's money. The 2011 spike after the financial crisis, that hit about $70. And today, we're sitting around $65.
The lesson from history is brutally clear. One of the source analyses we used summed it up perfectly. Spectacular runs often end with violent crashes. This isn't a maybe, it's a pattern. Parabolic moves almost always unwind, and they do it fast.
Seeing this historical pattern, really understanding it, that's the key to navigating what comes next. It's how you separate the signal from all the noise. If you want to keep tracking these kinds of signals across the markets, this is a good time to subscribe.
So this all sets the stage for a fascinating price war heading into 2026. It's a battle between a really powerful momentum story and a very sobering fundamental reality.
The bull case is simple. Fear in the world keeps safe haven demand high. The supply deficits aren't going away overnight, and retail investors are jumping on the bandwagon. But the bear case is just as compelling. History suggests a major pullback is due. Those high prices are already starting to cut industrial users to cut back, and the metal is starting to look awfully expensive compared to gold.
Which brings us to the critical question. With this dramatic tug-of-war between bullish excitement and bearish warnings, where does the smart money actually flow from here?
Well, the smart money often flows toward what's known as an asymmetric bet. It's a more nuanced strategy that goes way beyond just buying silver and hoping for the best.
This slide highlights that key difference perfectly. You could buy an ETF like SLV for direct exposure to the silver price, sure, but it's a passive investment. It just sits there. Alternatively, you could invest in the producers, the mining companies like Hecla Mining or First Majestic. They offer leveraged exposure to the silver price and, crucially, they generate cash flow. These are businesses designed to thrive when prices are high.
This leads to a clear, actionable playbook. First, you favor the cash-flowing miners over just holding the metal itself. Second, you don't get greedy. Trim your positions and take profits as the price runs up. Third, you actively hedge your risk. And fourth, you're ready with that dry powder to buy the inevitable dips in a volatile market like this.
And this brings us to the key takeaway, closing the loop from the very beginning. The smartest people in a market like this aren't trying to perfectly time the absolute top. They understand that in a feverish market, the volatility itself is the opportunity.
Most people just watch the price charts go up and down. This channel is for those who want to understand the hidden mechanics, the airlifts, the historical echoes, the strategic plays that are actually making them move. If you want to stay ahead of that curve, make sure you subscribe.